words from those given in brackets, write only the words next to question numbers 2.1.1 to 2.1.3. That's what they want us to do in the answer book. All right, so we're going to be doing answering here. This is where we're going to be answering our questions on our spreadsheet. Okay, 2.1.1. They're saying here the current ratio is the financial indicator which is relevant to the liquidity or solvency of a company. Which one we're choosing between the two here?
Liquidity.
Current ratio goes with the liquidity. Yes. What is the liquidity? What does the liquidity mean?
Whether the business will be able to pay for its expenses.
Exactly. Not really the expenses, but the short-term obligations. We talk about the liabilities, right? Can the business be able to meet the short-term obligations? We're talking about the short-term debt of the business, which is the current liabilities. We're talking about trade and other payables. We're talking about accrued expenses, bank overdraft, everything, shareholders for dividends, everything that is sitting under current liabilities. Can we be able to pay those obligations? Okay, 2.1.2, an increase in the fixed deposit will lead to an inflow or outflow of cash in the cash flow statement.
Outflow.
Exactly, outflow. If the fixed deposits increase, there will be an outflow of cash in our cash flow statement, right? Okay, outflow. And then 2.1.3, a decrease in inventories will lead to an inflow or outflow of cash in the cash flow statement.
Inflow.
Decrease in inventory will result to an inflow of cash, exactly, because when the inventory is decreasing, it means we sold an inventory, and then there will be an inflow of cash. So I'm going to say here inflow. Okay, then now we move on. We move on to 2.2 now. The information relates to the financial year ending 29 February 2024. So when is it starting? When it ends 29 February 2024?
The 1st of March 2023.
Yes, 1 March 2023. That's when it is. That's when it is starting. So this is our accounting period. Okay, 1 March 2023 to 29 February 2024. Okay. Now, what they're saying here, required, we must prepare the retained income note for the financial year ended 29 February 2024. That's what they want us to do. Then 2.3, they're saying refer to a partially completed cash flow statement provided, calculate and provide the figures denoted by Roman figure 1 to Roman figure 5. 2.4, calculate the following financial indicators for financial year ended 29 February 2024. The financial indicators, which is asset test ratio, interim dividends per share in cents, and then return on average shareholders' equity. So that's what they want us to do. Okay, these are the financial indicators. Sometimes we call them ratios, but it is actually the financial indicator. So looking at the information now that is provided to us, we're going to be starting doing a retained income note first. And then here I have a spreadsheet where we're going to do our retained income note, which is we're going to have balance at the beginning of the year, net profit after tax, buyback of shares, dividends on ordinary shares, interim dividends, final dividends, and then balance at the end of the year. This is just a format, a normal format that we should know. Okay. Then information, we talk about share capital now, number of shares, and then we have details here. Number one, we're having 1,450,000 shares in issue on 1 March 2013. So which means these were the shares that have been issued or that are in issue at the beginning of the year. Then we have 30,000 shares repurchased on 1 June 2023 at R3.70 above the average share price. These are the share buyback. Just after the beginning of the year, 1 June, we bought back some shares. 250,000 shares issued on 1 November 2023 at R17.20 per share. So these are additional shares that were issued during the year, and then we have 1,670,000 shares in issue on 29 February 2024. These are the shares issued at the end. Okay, so this information is more of about our share capital, everything about shares that we need to be aware of. We're gonna get that information here. Dividends. Interim dividends were paid on 31 August to all shares in the share register. So you must check here the trend. When did we buy back the shares? When did we issue the additional shares so that we can know which shares qualifies for interim dividends? For example, if we pay the interim dividends on the 31st of August 2023, which means these dividends, these shares, they don't qualify for interim dividends because we bought them back already by that time. So I'm going to say 1,450,000 minus 30,000, then I multiply it by the dividends per share, if it's cents or whatsoever. But these ones, I'm not going to pay dividends for these ones because it was after I've already paid the interim dividends. A final dividend was declared on 29 February 2024. Which is the end of the year. This is more of about dividends, interim and final dividends. So the information that we're going to be using when we're doing the note, retained income note. Okay, and then number C, extract from the statement of comprehensive income for the end of 28 February 2024. We have depreciation here, 1,620,000. We have operating profit. We have interest on loans, and we have income tax. So this is the information that will sit in the income statement. They usually provide us with that information for the purpose of doing the cash flow statement. Number D, extract from the statement of financial position on 28 or 29 February. This is the statement of financial position, which is the balance sheet. Fixed assets, carrying value. You can see now they're giving you fixed assets at a carrying value, which is the total of all fixed assets. They gave you the opening balance and the closing balance. Now, when you're doing the fixed asset purchased on your cash flow statement, you might have to consider everything collectively, because even if you look here, they gave you the total depreciation for all assets. So when you do your T account to calculate whether fixed asset purchased or fixed asset disposed, we are going to consider the full amount of all the assets combined, which is these carrying values. Current assets, they're saying C note 1. There's a reason for this. Probably we might have SARS income tax there or show us with dividends, or no, not on current asset, but SARS income tax might be under current assets, or there might be other things that you might have to consider there. Okay, but it's a breakdown. This is the total of current assets, and then we're going to have a breakdown note 1. Same with current liabilities. There will be breakdown under notes number 2, 18, 10, 12, and 44. Shareholders' equity, we have a total here provided to us, but the closing balance is, which is ordinary share capital and retained income, they did not provide us with those amounts. Okay. Then note number 1, which is for current assets. Items included under current assets, it's inventories, cash and cash equivalent. Okay, both of them, they're supposed to be there. So there's no issue. There's nothing much that we should be worried about there. Note number 2, items included under current liabilities. If you look here, shareholders for dividends, SARS income tax, bank overdrafts. This is the information that we usually use for cash flow statement. Shareholders for dividends, we might have to use it as well for the retained income note. So we should be aware of this information. Fixed assets, a vehicle was sold at a carrying value, but we don't know how much was the vehicle sold. And then fixed assets were also purchased during the financial year. So we do have those additions. So which means now in my cash flow statement, there will be a proceeds from sale of vehicles, right? Or there will be proceeds from sale of fixed assets or vehicles. There will be a purchase of fixed assets in my cash flow statement. Okay. Then number F, partially completed cash flow statement on 29 February 2024. So we do have interest paid provided to us, dividends paid, and then here we have Roman figure 1, of which we need to complete this one. Obviously here we have tax paid. This one is for tax paid. And then cash effects from investing activities. We do have proceeds from sale of fixed assets they gave us. So which means now we do have this amount. A vehicle was sold during the year at a carrying value, which means this is the amount of that vehicle that was sold, 232,000. Okay. The only thing now we will need under assets, which will be the balancing figure, will be the additions. The additions, and that's what we're going to record it here as part of Roman figure 2. So which means in this one we need to have what? Purchase of fixed asset. Financing activities, we have 3 and 4 here. I don't know what is that we need to put here, whether it's proceeds from issue of shares, share buyback. Those are the things that you might have to look at, because changes in loan is here already, so we don't have to worry about that. And then net change in cash and cash equivalents. Cash at the beginning they gave us, and then we have the question mark for number 5. Obviously, this is going to be the cash and cash equivalent at the end of the year. We need to find the amount. So this is the only information that is provided in front of us in Elo. So we need to work on this and see where is it going to take us to. Ne? We need to work on this and see where it's going to take us to. So our starting point now will be, because we need to do 2.2 first, which is the retained income note. That's what we need to focus on. Retained income note first. Are you ready?
Yes.
Okay, let's get into it. Okay, I want to do this with you. I want to discuss it with you until we finish it. Okay, I'm just removing these highlighters so that we can start on a clean question. Okay, let's start here. Prepare the retained income note for the financial year ended 29 February 2024. That's what I want us to look at now. The note, share capital note. Obviously, we need the opening balance, which is the balance at the beginning, not share capital note, sorry, the retained income note. So if we go to the information that is provided in front of us, we can see there we have ordinary share capital, which is an extract from the statement of financial position. How much is the balance? This is share capital balance at the beginning. Retained income, this is what we're actually looking for, which is 2,819,000. Okay, so which means this will be our opening balance, 2,819,000 rand. I'm going to have it here, balance at the beginning, 2,819,000 rand. Okay, and then next we're looking at like net profit after tax. Did they give us the net profits after tax here? If you look here, we have depreciation, operating profits, interest on loans, and then income tax. And then they're telling you that at a tax rate of 30%, 1,950,000. So if you're calculating the net profit after tax, how we're going to calculate it in this scenario?
We are going to say 70% over 30%.
Exactly, 70 over 30, because we're looking for 70% already. This is 30%, 1,950,000. So I'm going to say here 1,950,000 multiplied by 70 over 30. And how much are we getting?
4,550,000.
4,550,000. Okay. This is going to be our net profit after tax. Okay, did we buy anything in terms of the shares? Obviously, we did buy back some shares. There is 30,000 here. Shares repurchased on 1 June 2023 at R3.70 above the average share price. So how much am I going to record here as buyback of shares?
30,000 times R3.70.
Yes, and then how much are we getting?
111,000.
Yes, very good. 30,000. 30,000 multiplied by R3.70, right? This is the difference we're just taking. So we don't need to go and calculate average share price for now, because this is what we need. And then you said how much are we getting?
111,000.
111,000, because this is 111,000 rands. This is what? This is our buyback of shares, okay, and it has to be in brackets because we're buying back the shares, okay. And then now we need to work on our dividends, interim dividends, and then our final dividends. So what did they say about interim dividends? They told us here interim dividends were paid on 31 August 2023 to all shares in the share register. So what we're going to do for us to calculate these interim dividends?
We have to take away 30, whatchamacallit?
Yes.
We have to take away the 30,000 shares away from the issued shares at beginning.
Shares that were issued at the beginning, yes. We need to take away the 30,000, eh?
Yeah.
Okay, and then what we do after that? That is going to help us towards calculating the obvious share capital at the end if we carry on, because you see what happens here. They didn't give us the interim dividends. Yes, for me to calculate the interim dividends, because we paid on this amount 1,450,000 minus 30,000, then I need to multiply it by the interim dividends per share, of which they didn't give me how much that I'm going to pay here. So, but if you go to the cash flow statement that is provided in front of us, can you see here we have dividends paid here? Can you see here? And remember, this dividends paid consist of what? Do you know what it consists of?
The shareholders' dividends at the beginning or at the end of last year.
Shareholders for dividends at the beginning plus
the end of the last financial year.
Yes. What else is included here? Interim plus the end of last financial year, no?
Yeah.
Yes, so which means now, because I do have that shareholders for dividends, you remember that we have it here, and the shareholders for dividends. This is the one that is included there. So I can subtract it from this amount, and then I can be able to get my interim dividends. Am I right on that? Okay, so 5,728,000 minus 2,320,000. So my workings here for my interim dividends, I'm going to say 5,728,000 minus the 2,320,000. Okay, 2,320,000 rand. And then how much am I going to get as my interim dividends?
3,408,000 rand.
3,408,000 rand. Okay. So this is our interim dividends calculated. We do have the workings for that here. This is our interim dividends. Then now the final dividends, how much are we going to have as our final dividends?
2,338,000.
2,338,000. Very good, because final dividend is the same as shareholders for dividends at the end, né? Which is the one that is provided here. Okay, so I'm going to say 2,338,000 rands. Okay, and then now how much is the total of our dividends paid? 5,746,000 rands. If we add the two amounts, this is the dividends that we're getting. Then balance at the end of the year. Obviously, I need to add all of the amounts that I have here, which is all these ones. Then I'm going to get my total, which is how much? 1,512,000 rand. So this is our retained income note fully completed. This is our retained income note fully completed. Thank you on that. Then we're moving on to the next question. Any questions you have here? This one is clear and straightforward, né?
Yeah. I have a question.
Yes.
For the balance at the end of the year, will it be the balance at the end of the cash flow statement here?
Sorry, please come again.
Will the 1,512,000 rand be and
Yes.
scroll down.
Okay, yes.
Will it be the
same as cash and cash at the end?
yeah?
No. No,
Okay.
it won't be like that. Remember, this cash and cash equivalent at the end, we talk about bank here, right?
Okay. Okay.
Yes, we're talking about bank, which is cash in the bank plus cash float, plus any petty cash if there is any. But this balance at the end of the year for retained income, this is the note to the balance sheet. Remember, it helps us to get the retained income that must go to the balance sheet. If you look here, you see here under shareholders equity, they didn't give us the retained income at the end. There's a question mark there. So that balance at the end that we got, it's the amount that will be recorded in your balance sheet at the end of the year. It doesn't really help you with cash flow statement, this one. This is like a note to the balance sheet. You see now they integrated with the cash flow statement because the assumption is that you've already done this thing under the balance sheet. So we have to know it. They can even ask you share capital note, and here they can ask you trade another payables note, trade another receivables note. It's up to them. They will decide. But you must always be aware of that.
Okay.
Yes. Okay. So now the next question, which is 2.3 now, refer to the partially completed cash flow statement provided, calculate and or provide figures denoted by Roman figure 1 to Roman figure 5. So that's what we're going to deal with now, which is the cash flow statement. The first one, can you see here, cash effects from operating activities? We know that we have cash generated from operations, we have interest paid, we have dividends paid. They gave us the interest paid, they gave us the dividends paid. But what is here in this question mark that we need to calculate?
Taxation paid.
Exactly, we're going to have taxation paid. So we need to calculate taxation paid. So if I go to my if I go to my cash flow statement, you can see here, I'm going to have what? My taxation paid or tax paid. That's what I need to calculate. Okay. Income tax paid on all of that. So now we need to find out how much are we going to calculate here. Let's go and see from our information. I always say to you that for you to calculate the income tax, you need to do what? A general ledger account. We need to do a general ledger account. Okay, so let's do those workings here. Let's do those workings so that we are able to get that general ledger account. Okay. Okay, let me just do this. Try something. Let me just draft it again. Okay, so we're going to do our general ledger account. That is going to help us in terms of getting our tax paid. So we're going to do SARS income tax. Okay, so we have a debit this side and we have a credit this side. Okay, this is our general ledger account. Okay, now let's go to the information provided. Remember, we need an opening balance. We need a closing balance. I did say to you before that SARS income tax, it can be a liability account, it can be an asset account. So if it's sitting under current assets, which means that is an asset account. If SARS is sitting under current liabilities, that is a liability account. Looking at the information presented here, we have SARS income tax. You can see here, this is a liability account because it is sitting under current liabilities, both opening and closing, both of them, they are current liabilities. So which means now I need to deal with it as such, as a liability account. So if it's a liability account, my opening balance of 86,000 rands should be a balance brought down on which side, debit or credit?
Credit.
Exactly. I'm going to have what? My credit balance. Balance brought down. That's what I'm going to have here. Okay, balance BD, which is how much? That is 86,000 rands. Okay. I'm going to have my 86,000 rands this side. Okay, and then my balance carried down. Let's go and see 115,000. Where is this going to be recorded? It's going to be on a debit side. So I'm going to have my balance carried down this side, which is 115,000 rands. Okay, that's the information that we can see that is presented in our current liabilities note. 115,000, and then we have 86,000 rands. Okay, and we know that we're going to have our totals just below that. We're going to have our totals, and then we need to complete our as income tax. Here we're going to have income tax all the time. It will always be on a credit side because it increased the amount that we owing to SARS. How much is that? 1,950,000 rands. That is an income tax amount. That is that we have to go and record it in the note. Sorry, in the general ledger. So I'm going to have 1,950,000 rands this side, right? Okay, and then I'm going to have my total on my credit side, which is going to be the same as the one on a debit side, 2,036,000 rands. And then on my debit side, I'm going to have a balancing figure of a bank amount, which is the one that will be my tax paid, which is a difference between the total and 115,000 rands. And then we're getting how much? 1,921,000 rands, which is the tax paid. How's this one? This one's simple and straightforward, yeah?
Yeah.
Simple and straightforward. I want you to master this account. I don't want you guys to not to be able to do this this SARS income tax thing. It's very simple and straightforward. I did show you different scenarios that you can have balances on one side. Balance brought down and balance carried down can be on one side, which is credit side. They can also be on a debit side, but income tax will always be on a credit side. Okay, then we move to the next one. So if we move to the next one, we're going to investing activities now. Under investing activities, we have this question mark. So what is here in this question mark? Because we do have proceeds from sale, we do have change in investment. So what is going to be there?
Fixed assets purchased during the financial year.
Exactly, that's going to be the purchase of fixed assets, right? I'm going to have purchase of fixed assets. That's what I need to have here. Purchase of fixed assets. That's what I need. That's what I need to have here. Of fixed assets purchased. Either way, you can write it whichever way you like, but I want to see purchase of fixed assets or fixed asset purchase. Anything that has to do with the fixed assets that has been purchased. Okay, looking at our extract from the statement of financial position, you can see here what they gave us. They gave us the carrying values of the fixed assets, as you can see here. And what did I say about this? I said we need to create a general ledger account again for this one. We need to create what? A general ledger account, just like this one. We need to create a general ledger account just like this one, but now it is no longer going to be SARS income tax. We're going to create it as what? As fixed assets. You can see it's not specific to whether it's because all of them are combined, né? Because all of them are combined, it's not specific. This one is not specific to vehicles, no. But it is for all the assets, not just vehicles only, but all of them. So it's something that I want us to be aware of. It is about all the assets, not just one asset, which is vehicles or equipment or land and buildings. No, but all of them are included here. Okay, so this carrying value that they're giving us 39,365,000 because this is an asset account. They will talk about fixed assets here. So the balance brought down will be on which side? Debit or credit?
Debit.
It has to be on a debit side. Yes, it has to be on a debit side because we talk about assets here. Assets, they're increasing on a debit side. So balance brought down has to be on a debit side. 39,365,000. 39,365,000. thousand rands. You can call it a balance brought down. It's up to you, or you can call it carrying value at the beginning, right? You can call it carrying value at beginning. It's up to you, whichever way you want to call it, but you know this is a carrying value at the beginning from the fixed asset note, right? It is actually the carrying value at the beginning, and the carrying value at the end will be the balance carried down on our credit side. And how much will be the carrying value at the end? That is 43,095,000 rand. So that's what I'm going to have here, 43,095,000 rand. So what is this? This is the carrying value at the end. Okay, what is the format? What do we have under movements? But on the fixed asset note, what do we have under movements?
Additions and depreciation.
What else?
Carrying value of assets disposed.
Exactly. We talk about disposal at carrying value there. So I'm going to have additions at cost. And we have, obviously, we're saying carrying value at the beginning plus additions at cost minus disposal at carrying value, and then minus depreciation, right? Depreciation, that's what we have. Additions at cost, that's what I'm looking for. But disposal at carrying value, we do have disposal at carrying value from that cash flow, because they told us proceeds from sale of fixed assets, 232,000. Can you see that we do have this amount?
Yeah.
And they said here a vehicle was sold at carrying value. So these 232,000 rands, that's what I'm going to have. 232,000 rands, that's what I'm going to record here. 232,000 rands. And then my depreciation, they gave me a depreciation there on top, which is 1,620,000 rands. So that is the depreciation for all the assets. 1,620,000 rands. Okay, then what do I need to do now? I need to balance my account. So I'll get a total under credit side, which is how much? 44,947,000 rands. Okay, then I'm going to have the same thing on this other side, the same total, and then how much will be my additions at cost, which will be the difference between the two amounts, and then how much are we getting? 5,582,000 rands. Are you happy with this one? Any question?
No.
Okay, perfect. So this will be our purchase of fixed assets. So I'm going to say minus, or here again, sorry, you must be careful here. Taxation paid, we must always have bracket. Purchase of fixed assets is going to be minus 5,582,000 rand. Okay, because these are just your workings, Kinele, you need to put something also here, because that's where you're going to get marks, right? These workings, if you do them on the cash flow statement, you must put some workings there, of which you're going to take 1, 2, this plus this minus this, right? This plus this minus this, you're getting your 1 million. So it's going to be 86,000 plus 1,950,000, and then you're saying minus 115,000 rands. Okay, so this will be our workings to get our taxation paid. But for fixed assets that were purchased, so our workings will be this 39,365 minus all of these ones, right? Minus all of these ones. And then we're getting our 5 million. So you can say 39,365. Then you're saying minus 232,000. Then you say minus 1,620,000. Okay, 1,620,000 rands, and then minus 43,095,000 rands. Okay. So that's what is going to, like, that's what you need to show on your need to show on your cash flow statement. Part of the workings, if you have to complete it on the cash flow statement. But if you complete it on that box where you have to answer the question there, you can do your T account there. You can do like T account on the other side, and then you write your workings like this. It's up to you. But this one is a must for you to understand a general ledger account. Next, cash effects from financing activities. I have 2 question marks here. What am I going to have in these 2 question marks?
Repurchase of shares.
Repurchase of shares. Yes, we bought back some shares. And then the second one?
I'm not sure. I think there was an issue as well, shares.
There was an issue of shares as well. Yes, exactly. So we have share repurchased, and then of 250 shares issued on 1 November 2023. Okay, so let's start with the share buyback, right? Let's start with the share buyback. We do have what? The proceeds from issue. So we're going to have what? Proceeds from issue of shares. From issue of shares. Okay, we're going to have what? Shares repurchased, right? Shares repurchased. Okay, proceeds from issue of shares. Let's go and check. Here we have 250,000 shares issued on 1 November at 17 Rand 20 per share. So this one is easy and straightforward to get. 250,000 multiplied by 17 Rand 20. How much are we getting here?
4,300,000.
4,300,000 rand. Okay, thank you on that. 4,300,000 rand. Okay, so that is my proceeds from issue of shares. And then shares repurchased. On the shares repurchased, how much that I'm going to have here? They said shares repurchased on 1 June 2023 at Rand 70 above the average share price. So what do I need to do now with this one?
Work out the average share price.
I need to get the average share price, né? Okay, so I need to go and do those workings. Average share price. Okay. Average share price. Okay, so how am I going to get it? Get the average share price? What do I need to do for me to get my average share price? Okay, let's go back to the question. We do have the yes.
Don't you scroll up to the thingy for the balance? Yeah, you put 22,910,000.
22,910.
And then at the bottom, you're going to put brackets.
At the bottom, I'm going to put brackets, yes.
Can you please go back to the question?
So you come here.
Yeah, you're going to say 1,450,000 shares minus 30,000.
Why are we subtracting 30,000?
Because they no longer count. Because the average. Wait. Never mind. You don't need to subtract it.
Yes, we don't need to subtract. We just use 1,450,000 only, né? Because we just calculating the average. Okay, thank you for noticing that, Kinelwe. For 1,450,000, so I'm going to have 1,450,000 rands. That's what I'm going to have here. Okay, 1,450,000 rands. Okay, then now how much am I going to get here?
You
Is my average
R1.58.
1.58.
Yeah.
Not
oh
really.
No.
Yes.
I forgot a zero. 15 Rand and 8 cents.
15 rand 80 cents.
Yeah.
15 rand 80 cents. So this is our average share price. So let's go back to the transaction. They said shares repurchased on 1 June 2023 at 370 above the average share price. So the total amount they are repurchased on is going to be how much? 370
19 rand
plus
50.
the total is going to be
19 rand 50.
19 rand 50. Okay, gonna be 19 rand 50. Okay, so which means now I'm going to do my workings here for shares repurchased, and I'll say 30,000 multiplied by 19 rand 50. Okay, and then how much am I going to get there?
585,000 rand.
585,000 rand. Okay, so this is our shares repurchased. Okay, this is our shares repurchased. Yes. The total, because you know why we're using the total here, because you remember that journal that I used to tell you about for when you buy back the shares. You still remember that journal entry for share buyback?
The general one.
Yes, the general journal
Yeah.
entry. What did we say on that one? What are we debiting? What are we crediting there?
You are debiting retained income.
Debiting retained income, yes.
And you crediting no. It's the other way around. Because they're getting less.
I'm crediting retained income, ne?
And you're debiting ordinary share capital.
Ordinary share capital.
Wait, but isn't there supposed to be? No, yeah, I think that's it.
No, one is missing. 3 accounts are
Bank.
affected. I'm debiting bank. Is it like this?
Bank is supposed to be.
Look what's happening here. Share buyback,
Yeah.
it decreases the retained income. Which side is retained income decreasing? Debit or credit?
Credit.
No ways.
No.
Retained income is an equity account. It decreases on a
debit
side. So retained income has to be on a debit side. Bank, when you're buying shares using money from the bank is an asset. Which side is an asset decreasing?
An asset decreases on the credit side.
So we need to credit the bank, right? Because bank decreases here, we're buying shares. And then ordinary share capital, is ordinary share capital increasing or decreasing when you're buying shares?
Decreasing.
So since ordinary share capital is an equity account, does it decrease on a debit or on a credit?
Debit.
Exactly. So this one is correct. And then retained income has to be here. So this journal entry will always be like this, ne?
Yeah.
This journal entry will always be like this. Now, I want us to put the values then. Ordinary share capital, we said here it's going to be 30,000 multiplied by how much? And then here we're having under retained income, I'm going to have 30,000 multiplied by how much? Ordinary share capital, we're using the average. You remember that. And then retained income, we're using the extra amount. Obviously, retained income we've already calculated. We said 30,000 multiplied by 370. Still remember that. And then we got 111,000 rand. So I'm going to say here multiplied by the 370, and then we got 111,000 rand. Okay, that is debit. Okay. Ordinary share capital, we're using the average. How much is the average share price?
15 rand 80.
15 rand 80, yes. And then how much would be the total then? That will be here.
474,000 rand.
474,000 74,000 rands, ne?
Yeah.
Okay. Then bank, how much would be in the bank? That will be the two amounts adding. I'm going to add to the two amounts, ne? Then 585,000. So this one, bank, it will affect your cash flow statement, ne? Cash flow. Then this one, it will affect your retained income note. This one, right? Retained income note, this one. And then this one, it will affect your share capital note. Yes, this is how we deal with these two amounts. Retained income, cash flow. So on the cash flow statement 585, do we have 585 on the cash flow? Yes, it's there, right? And then retained income, we have 111,000 rands, which is true, which is correct. There is it there. So when I do my share capital note, I'm going to have 474. Are you happy with our journal entry?
Yeah.
Okay, perfect. Now let's go to the next one. Let's carry on now. So we're gonna be looking at this net change in cash and cash equivalent. Cash at the beginning. This one should be cash and cash equivalent at the end, right? It should be the cash and cash equivalent at the end. So that's the amount that is supposed to be. That's supposed to be here. Am I right?
Yeah.
Now we need to calculate it then and see how much is it going to be, the cash and cash equivalent at the end. So you can see here, yes.
Oh, you can continue.
Let's do it. Let's get the cash and cash equivalents at the end, because we do have, you see here with cash and cash equivalents that we have there, and we have bank overdraft here. So how much would be our cash and cash equivalent at the end?
Will it be negative 3,219,000 rand?
Negative 3,219,000 rands. You said 55,000 minus this one, yeah?
Yeah.
Yes, because we have a bank overdraft, but we have cash and cash equivalents, which is positive. Probably this is a petty cash or cash float, and then what is sitting in the bank is negative. It's an overdraft. So we're supposed to say 55,000 rand minus. We're supposed to say 55,000 rand minus that 3,274,000. Okay, 3,274,000 rands. Okay, and then we're getting how much?
3,219,000 rand.
3,219,000 rand. Yes, very good on that. So this is our cash and cash equivalents, and it has to be negative. We must not forget on the cash flow, the amount, if the amount is an outflow, we must show it as negative, right? So we should not forget that. Okay, then now we have covered everything that is sitting on the cash flow. So then the next question now is to calculate the following financial indicators for the financial year ended 29 February 2024. What is the acid test ratio? You know what is the format for acid test ratio?
Non-current liabilities.
No.
I'm not sure.
Not really non-current liabilities, né? But acid test ratio is the ratio after the current ratio. Ne? We have current ratio, we have acid test ratio. It affects only the short-term obligation and the short-term assets of the company. So the acid test ratio is current assets minus inventory, right? Current assets minus inventory is 2 current liabilities, right? So this is the format that we're using, right? Current assets minus inventory is 2 current liabilities. So we want to check if the company can be able to pay short-term obligations without relying on inventory. That's why we're separating the inventory out to say, can I use my money in the bank and my receivables, my debtors, to pay my creditors? Will I be able to do that? That's what we're going to check. So now current assets minus current liability minus inventory. Let's go and check. That's why they gave you under current assets. That's why they gave you note 1, which is the breakdown. So that you can be able to see that how much is inventory that you need to subtract. You see now the reason why they gave you that breakdown. Yes, so our current asset is 9,623,000 rands. Okay, 9,623,000 rands. Then minus the 4,190,000 rands. And then is 2 current liabilities. How much is my current liabilities? The total 18,310,000 rands. Can you see this?
Yeah.
Yes, 18,310,000 rands. Okay. Then if you subtract the two amounts, how much you getting? 9,623 minus 4,190.
5,433,000.
5,433,000 rands. 5,433,000 rands is to 18,310,000. Okay. Okay, then what do I do after this one?
Divide 5,433,000 by itself.
No, not by itself, but by 18 million. By 18 million.
Oh, okay.
Yes, so we divide by 18 million in both sides, 18,310,000 in both sides. So what will be my ratio? 5,433,000 divided by 18,310.
0.296. So 0.3.
So it's gonna be 0.30, right?
Yeah.
2 is to 1, because this one 18,310, I'm going to divide it by 18,310, which gives me 1. We always divide on a ratio. We always divide with the number on the right hand side.
Oh, okay.
In both sides. So I'm dividing by 18 in both sides. So that's why I'm getting 0.3 is to 1. So this is my ratio. So it means that I cannot be able to pay my creditors without relying on inventory, because I only, for every 1 rand that I'm owing, because you can see that I'm owing 1 rand here. Can you see that? But how much I have for how much I have to pay, I only have 30 cents. Can you pay your 1 rand with 30 cents?
No.
You can't. So which means now, without relying on inventory, the business is unable to meet short-term debt. So the business is insolvent actually. If we had to remove inventory. That liquidity we were talking about on the first question, that liquidity, remember what we said there, the current ratio is a financial indicator which is relevant to the liquidity of the company. That is true, but not the current ratio only. Even the acid test ratio is relevant to the liquidity as well. So I cannot pay my creditors without relying on inventory. So I need my inventory to pay, which is dangerous, because sometimes inventory you have to sell it first before you can convert it to cash. So you can't rely on your inventory. Stock is something that you have not yet sold. Remember, anything can happen on the stock. It can get damaged. It can expire, and you end up not being able to sell it. So you must be always safe without relying on your inventory. Dividends per share, we did calculate it. We did calculate that. The next one, what did they say here? They want interim dividends per share in cents, not just dividends, but interim dividends per share. Okay. Because you remember the dividends per share, we calculated it using what? We calculated dividends per share using we calculated the interim dividends using the difference between the two amounts. There were 2 amounts that we used, which was this one on the cash flow minus the shareholders for dividends. And we got the interim dividends. Where is the interim dividends? We got it. It's here. There is it it's on my retained income note. 3,408,000. Can you see there?
Yeah.
That is my interim dividends, 3,408,000. So, which means my formula, it needs to say is equal to interim dividends over number of shares issued, okay? Is equal to interim dividends over number of shares issued. So my interim dividend is how much? 3,408,000 rand, okay? 3,408,000 rand. And then how much is my interim dividends that were issued? We need to go and check on that. How many interim dividends? Okay, how many dividends qualified for how many shares qualified for interim dividends? They said here interim dividends were paid on 31 August 2023 to all shares in the share register. Can you see this one? Now, because we paid on the 31st of August, that's when we said the 30,000 does not qualify for interim dividends. So how many shares will qualify for interim dividends? It's going to be 1,450,000 minus 30,000. How many shares we left with them?
1,420,000 shares.
Exactly, it's gonna be 1,420,000 shares. Okay, then how much we're going to get is my interim dividends per share then.
£2.40.
£2.40, yes, £2.40. Or you can even say it because what they wanted there, they wanted you to show this in cents actually. They said interim dividends per share in cents. Can you see that? So which means this is going to be 240 cents. You can also write it as what? 240 cents. So but this is the answer, eh?
Yeah.
Okay. Return on shareholders' equity. Return on shareholders' equity, net profit after tax over average shareholders' equity multiplied by 100. Okay, how much is our net profit after tax? We did calculate the net profit after tax, which is 4,550,000. You remember that? 4,550,000 rand. So this is the amount that I'm going to record here. And then my average shareholders' equity. I'm going to calculate my average of the two amounts. Shareholders' equity, I have 28,248,000 plus the 25,729. Can you see that?
Yeah.
Yes, 28,248,000. 28,248,000, and then I need to say plus how much? Plus the 25,729,000 plus 25,729,000 rands. Okay, and then I say divided by 2, both of them. So you add them first, you get the answer, then you divide it by 2. You can say multiply by 1/2. Okay, then now I will have 4,550,000 over how much? What do we get if you break down this amount?
26,988,500.
26,988,500 rands. Okay. Then now multiply this over this, multiply by 100. How much are you getting?
$16.86.
16,886%. Very good. Very good, Kinelo. So this was the question. Nothing is left. We've answered all the questions. So which means we are able to finish the question, which is good. What I'll do, I'll email this to you. I'll email it to Smang as well. You guys must practice the question. Make sure that you always practice. But you can see this thing. is these things difficult?